The RBA meeting today, keeping the cash rate on hold at 4.35%. That follows inflation falling to 4.1% for the December quarter. Retail spending, though, down in December. Unemployment holding steady at 3.8%. What does it all mean for not just your home loan, but for the economy? Let's get our money man in, Sky News Business Editor Ross Greenwood. Well, give us a sense first. We'll talk more broadly about the economy if I can, Ross, but if you've got a mortgage, breathing a sigh of relief tonight, but does this mean the worst of those cuts are behind us, or are they still on the horizon potentially?
Well, the cuts potentially are out there, but the Reserve Bank today has basically surprised markets by not becoming a little bit more, shall I say, relaxed about the future of interest rates. They're continuing to say that there is going to be, potentially another interest rate cut or more if they can't get on top of inflation. Now, it is worth considering already that a typical homeowner with a $750,000 mortgage is $21,000 a year worse off than what they were before. You can see here interest rates started to rise back in May 2022. So that's a big, big lump of money for a typical household who might be on average, $90,000, $95,000 is the average family income in Australia. So that just shows the impact of those rate rises. So the relief was going to be pretty much welcomed if it was there, but it wasn't there today. And I mean, regardless of state premiers, barracking for rate cuts today from the Reserve Bank, well, the Reserve Bank governor was too smart for that. She basically said, look, they've got their job to do. I've got my job to do. My job is to get on top of inflation, because if I don't, the hurt to Australian families, the hurt to Australia's businesses is going to be much, much worse in the long term. And that's where absolute credit to Michelle Bullock today. She showed independence. She did not kowtow to where government wants to be right now. She basically exerted the independence of the Reserve Bank and did say that inflation is the number one target that Australians need to be concentrating on.
How do you weight her comments against the comments from a recent report from the OECD in relation to Australia saying monetary policy needs to remain restrictive, i.e. no fall in our rates?
Well, in fact, that's precisely what the Reserve Bank, I think, today has done. It's left the door open for more rate rises. Now, that's going to be a lot of shock to people who have heard in the past week or so, as inflation has trended down, that there could be 3 rate cuts by late this year, and indeed another 3 rate cuts by the middle of next year. But it's worth observing the Reserve Bank's own forecasts, which say that the inflation rate won't get back into its target band until the middle of next year, and won't get back until the middle of that target band until the middle of the following year. So that being the case, even its own assumptions of the economy do suggest that there could be 2 rate rises by the middle, or 2 rate cuts by the middle of next year. But, it really is still going to be a factor as to what happens with our inflation rate. What happens with the housing crisis right now that the government's presiding over, where that is causing inflation to rents? What's going to happen with the inflation crisis when it comes to insurance that continues to rise in so many parts of Australia? So these are all issues that don't go away. They're not imported inflation, as the government likes to say. It's homegrown, and that fundamentally is a problem for not just the Reserve Bank and households, but also for the government itself.
Look, and as you remind us, you're talking about a $20,000 on average increase in people's mortgage over the period of that graph we saw before of the rate rises. Of course, that's after tax dollars. Yep. Quick comment, because I know you can read a P&L pretty well. We haven't seen the modelling behind Chris Bowen's announcement in relation to electric vehicles and their efficiency standards, but no modelling's been put out. Well, experts say that's a good cause for worry. They won't release the modelling. A lot of concern from people like Motor Trades Association of Australia saying, they say it's going to be a $1,000 saving, for sure, but where's that? And a lot of these rules are going to impact utes and 4-wheel drives, SUVs. Well, they make up 9 out of the top 10 best-selling cars in this country. What did you make of the Bowen announcement?
I was shocked by it, I will say. And I recognise they've got to have standards and where it goes. But if you consider Australia as a country where driving long distances is the norm, as compared with European countries on which the government is basing many of its assumptions, where the distances driven are much, much shorter, and certainly their cities are congested and have better public transport systems. So from that point of view, until the technology is significantly better and really the price of those electric vehicles comes down significantly, then Australians are going to do exactly what they're doing now, and that is drive petrol-driven cars and diesel-driven cars because they are the vehicles that are best suited for them and their lifestyles. So, the government has got a really significant job on its hands to convince Australians, and the way to do that is not simply to tax people almost out of their cars. It's to basically try and wait until the technology is better to then have the case for people to be economic, but also from a practical point of view to get into those electric vehicles.
Well, 2030 is not so far away now, only 6 years. Ross Greenwood, thank you.